Hey, what's up? Good to see my TradingView friends. I like you guys. Thanks for coming to hang out with us Friday. I was off last week, so I got a lot to talk about this week. A lot has happened, both in the markets fundamentally, trading wise. My own trades. I had a trade that got put on the editor's pick, and I'm not going to say I'm embarrassed by it, but it's a lot to learn from. I'm going to dig into that actually because that has a lot to do with something else that came out this week, which was the leading economic indicators. I'm going to tell you what that is, uh, as well as talk about Ethereum, the price action around the Shanghai upgrade. What's ironically funny about that is I was talking to a friend of mine last night who told me that he had gone short because in case you don't know what it is, the Shanghai upgrade is the point. It's kind of like a lockout period for people that have stock options. That have vested, they can then sell. Well, these are the people that have staked their Ethereum since the last changes to Ethereum. And so the logical thing was that when people could sell, they would, but the opposite happened. And that's just markets for you. I want to put this up for the lulls to begin with. Let's see. So this is the inverse Kramer index, which I think there's actually an ETF that they're trying to put together for that. Kramer is a legend of opposite of epic proportions. So on yesterday, right after the close, talked about how Boeing is really incredible, and then they halted their flagship model and it tanks. I can't remember if they actually had earnings, but I give Kramer a little bit of leeway in that his job is just to talk about what people are buzzing about for CNBC. And when you talk about something that everyone's talking about, tends to be after a big rally. So if you start jabbering and getting interested in something after you've had a big move up in price, there's a good chance that it's not going to be a very good investment. I think that's due in part to the inverse Kramer phenomenon, but it's still kind of funny. It's still hilarious. So, yeah, we'll take a look at that option, farmers. As always, if you guys are joining us late, I do this every Friday, 4 p.m., except for last Friday, which is Good Friday. And I want to cover, all the things that matter to me, what I think is useful for trading. I also have had a lot of questions over the last couple of weeks about my particular methods of trading. I don't teach classes. I don't charge people because I value my freedom because I'm a professional trader. But if you have questions, if you want to know what works for me and have access to free indicators, well, you just got to ping me. Signatures below. I have a Discord, a community that I don't charge for, that I just share my ideas on a real-time basis. And if you have questions, hopefully if I get everything in this podcast, this live stream, we can talk about some real instances from the last week trading, things that worked, things that didn't. Because I've had some people that use my spike indicator and they use it wrong. And I want to avoid that. I want to make sure that people know how to use it correctly. And so I want to alleviate that. Maybe one of these days I will teach a class. But yeah, join the link below. I think we had a couple of new people come in, a lot of new people come in from that post. But yeah, if you're in the chat, post in on YouTube, TradingView, or Discord, where I stream all three at once. If you got symbols you want to look at them. I really appreciate viewers coming in and asking me to look at things. I've actually been keeping a list of viewer things to look at because a lot of them are what I call YOLOs. And one in particular is injective protocol. I wish I put a note in here who that was. I could probably go back to 2 weeks ago when we were looking at this. I think that, yeah, I had this. Well, I'm going to go back to it. This was one of those typical situations that people bring to my attention when something has gone up a bunch. I think it was even 2 weeks ago where I think it was like in March, where the price was looking something like this. And I've already got this drawn up in the way that I analyze anything, where you had a big initial run in January and it pulls back to the 50%, holds. And then what I would say is you're looking for a break of that high. You've actually got it, you're good to go. And I hope that the guy was staying in it, because really the little minor detail right here was what mattered. But then again, I also keep up with some other things that people looked at that don't act quite the same way. But we can learn from these how to play these pumps. And so I'm really happy that people bring these to my attention so I can talk about them and look at them and have the ideas out there. So yeah, if you got any symbols to look at, I will give my analysis and my opinion. You may not like it, but it's going to be my honest one. And I've looked at a lot of these, so I'm pretty confident in my methods. Let's look at the list here of things I wanted to look at today. See what I want to start off with. Definitely going to talk about some fundamentals because we had a big thing happen this week. That is the CPI. CPI is the consumer price index. It's what the Fed looks at to measure inflation. And for the last about 6 months, CPI, we're going to use ES, that's S&P Index Futures, to look at this. I like that because it has that after hours CPI release built into it, because those things happen at 8:30 a.m. Eastern. But ever since October's CPI, back in October 2022, that marked the bottom. The December CPI marked a top. And then we just had the CPI this week. And I still think this is a potential top. It's been a little tricky to trade. Didn't like what it did to me this week, but we're going to talk about that some more and why fundamentally I think that's the case. So let me go back and check the chat. Let's see. Yep, we'll definitely take a look at VIX and DXY. All very important. Dollar has been doing some important things. XLF and RTY compared to gold. Can you just go ahead and punch in the symbol real quick, Options Farmer, so I can just paste it in and talk about it? Because I could probably figure it out, but that's going to save me a little bit of time. My manager, Jen, is at a birthday party today, so I won't have my Joe Rogan Jamie to look stuff up for me, some memes and stuff. So I'm prepared going into it. So let's talk about the price action this week, the high points, and the big number. The big thing is the CPI, and that happened on Wednesday morning at 8:30. And let's just go back to the price action at that point. So I made a post about this, which got to the top of the editor's pick, because what I saw going into the open, the cash open, 9:30 that morning, was a Mr. Happy double top. His little eyeballs around the double top, and then the smiley face going into it. That spike right there, where price shoots up and breaks a major high, that high being from April 4th, last week's high, that for me is that's the one thing I trust. Does it always work? No, nothing in trading is 100%. But a false breakout like that is so key. Key. Why is it key? It's key because in the case of the daily chart or any time frame chart, I believe it works. The October CPI number created a spike to the downside, and that was the flip right there. What a spike basically means to me is you have some volatile price action that breaks a past high or low and then closes back inside that range. Is a false breakout. And I don't think there's a much more powerful sign of reversal, because if you think about it, all the traders get going in one direction, in this case right here, down. And then for some reason, they don't find more sellers, and the buyers, the bulls, pump it back up. Think about the people that went short. Think about the people that are now looking at a loss. Well, what are they going to do if this thing keeps on rising against them, keeps on squeezing them out? Well, they're going to capitulate, and that's just going to push price higher. The opposite is true that we had in December, where price pushed, let's just go here so we don't see the following, where price pushed above the previous high on CPI only to close back inside of it. That's another sign. And the key thing here is that this is happening at a major level. This is happening at the 50% level on the S&P index futures 4155. It is the 50% retracement of the entire 22 down move. The entire year from January 4th, 2022 to October 13th, 2022. That level has been the level, the most important level of this year. So much so that in December, where things kind of messed around, that whole January rally where everyone got so bullish about AI and whatnot came back up to that level and held it once. And then we had this February and March down move again to this same auction range. And once again, now, what are we doing? We're trying to break it. And so now if we dig down and we look at that CPI, I don't blame myself one bit for seeing my setup, a spike right at that level and a potential short. Worked great through Wednesday. You know, even on the 1 minute, man, it was a thing of beauty where you had even the 50% of the news move itself from 829. See, here's another thing. Before news events, you often see this spike happen. I don't know what causes it. It's not computers, because I can go back in trading journals of like the Market Wizards books, people from the 70s talking about how before major news events, price will swing in an opposite direction only to come back. And so this phenomenon happens all the time, which is why it's a signal that I trust. And so a spike which breaks the past low only to close back in it and boom, a reversal. And so within that price action from on the 1 minute, you know, just remember, we looked at the daily chart for October, the spike that happened, and then here we are down on a 1 minute chart, the same thing happens. False breakout. It's a signal I trust. I mean, you don't see me using moving averages and stuff like that because I don't feel like I need them. I think that you can just look at price action, figure out where people are trapped, and that puts you in a good position to win. Again, this 2022 50% level that I have drawn off right here, that is the level for, goes back more than a year. And here we are on the 1 minute time frame on a major news event. The 50% of the year's move and the 50% of the news move all come together. It can't push higher. It gets back below that level. And I went ahead and shorted this with a wide stop above this high because I was really playing this as a position. Like, this is going to be a market reversal. That's what I was going for. But had I wanted to be a little more granular, I could have sat here on the 1 minute time frame, look for a break and retest of that same level. Again, it's a year-long level matching with a 1 minute level. And look at how solid that is. It can't break above it. 1, 2, 3, and down it goes. That gave me a lot of confidence in this trade to start out with. It's nice to see a trade start out well, but it was not to be. And so overnight, I sat there, didn't change anything about it, but man, don't that suck. Because while it went ahead and I had to close, I had to get out because it was breaking that high, we still don't have a solid confirmation. It did not just rocket up beyond it. So what I'm going to be looking for going into next week is for us to hold this level. To be fair, we have 2 closes above this level. We have a daily bar from yesterday, Thursday, and we have a daily bar from Friday, today. For the week, we have a close above it. But if you notice, in the times that it's come to it before, from September 2022 all the way from December and February, the week has not closed until now. But this is our first sign of bullishness. I'm saying that, and I'm going to contradict myself later in different ways, but we'll get to that in just a second. So if we want, we can go and we confirm this on the ETF itself, the SPY, And that is a little bit different because from the 2022 high, and the SPY is going to only show data when the cash open is going. I actually don't use after hours data. I use futures for that. But the SPY is what a lot of people refer to. And I'm not going to add after hours data because, like I said, I have the data for futures. But don't really have that confirmation here. But I'm going to be looking next week for us to do either a nice closing bar above it to give us a confirmation, or for us to close below it to short. I'm still thinking bearish because we are at a resistance, and that's what I'm going to be looking for. So that's my position there. I had no position going into the weekend, but next week I'm going to be sharp and looking for bearish setups. And you know what? If I get stopped out and proven wrong, then we are free to go up. By the way, if you guys have any questions, let me know. Let me check chat so I don't rant forever. VIX looks like it might shoot up soon. VIX is a really, really good indicator for timing the market. And yes, did we close? I have this level marked off because basically throughout 2022, April, August, December, those points in the VIX where it got down to that 19-20 range, that was a reversal point for the market. But now we have come back to said range, held it as resistance, and the VIX is pushing down. And there is an inverse correlation between VIX, the volatility index, and the market itself. If the market is going smoothly up and everyone is not afraid because everybody's making money on it being bullish, fear, volatility goes down. But when fear shoots up or when fear hits a point, that can be a turning point in the market. It's the tail wagging the dog, because VIX is a derivative of the S&P 500 options implied volatility. So right now, VIX, did we break that level? Did we close below it? Let me measure. Look at that. Right there at the low, that is 1707. Inconclusive. It's playing tricks on us, playing games with us. But earlier this week, what I noticed, and this actually came out in March, was the leading economic indicators. Now, this is by the conference board. The conference board, I'm going to have to look at the About Us, is a think tank that delivers trusted insights for what's ahead. It's a think tank. And what they look at is indicators besides GDP, gross domestic product, because gross domestic product and employment are the two things that signal a recession proper. And so we had 2 quarters of negative GDP in 2022, the last 2 quarters, I believe it was. But we didn't have a drop in unemployment, so we can't have a technical recession. And then now we've had a little bit of a GDP resurgence. But throughout this whole thing, and this is the key thing to look at here, this chart shows with the gray bar the change in GDP. In other words, when you have negative GDP like we had in 2008, that is definitely a recession. The shaded areas are recessions. And so we had a recession in 2001, a recession in 2008, and a recession in early 2020, a very small one because nobody was going there to work. But if you notice, the blue line is the LEI, the leading economic indicator. And we're going to get into what those are made up of when we scroll down the page. But as you can see, from an indicator standpoint, it does lead before a recession. In fact, in these examples, with the exception of this little dip here in 2016, which was very, very minor, every time it's dipped below the 0%, that has signaled a recession is coming within a certain degree of time. And so we have a massive down move in the leading economic indicator starting in 2022, but now accelerating as we get into 2023. And so a lot of people have been afraid of a recession. A lot of people have been expecting a recession. If you look on the news, you're going to see all these things about recession because fear leads. I try to discount FUD. In fact, I try to bet against fear, uncertainty, and doubt when I can, because I think when everyone's thinking in one direction, the risk reward is better if you take the opposite of what everyone's saying. And I'll complete that thought at the end of this. But what this is made up of, and what's really leading the leading economic index, is the leading credit index, and that is comprised of how much debt people have on. That's becoming a big deal there. Stock prices minorly, interest rates not really affecting it, but consumer expectations for business conditions and ISM, which is industrial, I think something manufacturing, index of new orders. That's what's really keying and pulling it down. Also, building permits, new housing that's being built. What this means is companies, manufacturing, they are ordering less stuff to make more stuff. And a lot of this is psychological. People's expectations of a recession kind of creates a feedback loop where people think that we're going to have a recession, so they start saving cash. They stop participating in the economy, and that ironically leads to a recession itself or exacerbates its fear. So no one wants to lose their money, so they're going to get really tight and not take that vacation, not buy that new car, not buy that new house, not do that renovation, not buy that big screen TV. So all that in the aggregate of the economy makes it slow down. And so that's what we're seeing right now. It's been happening for a while, but it's really starting to turn down now. That being said, I had a nice back and forth, which I need to get back to and respond to in this post from a gentleman or lady, World Economics, and this is a common sentiment where people talk about the Fed, the biggest creating the biggest financial bubble ever. There's a lot. He's right. There's a lot. We're at record consumer debt and record low consumer saving. It's not a good idea. But there's a lot of cratering economic data, banking crisis, real estate going down. FUD. Namaste. One of the key messages that I talk about is I've been doing this for a decade now. And I can go back and find you articles from Zero Hedge, from CNBC, where every single day, at least every single week, is some expert talking about how this is the big one. The economy is going to crash. The dollar is going to fail. It's going to be worse than 2008, worse than the Great Depression. It's really, the phenomenon is a sort of a bleeds that leads. And now in the modern social media era, it's sort of sensationalism. If someone publishes an article saying the data says that things are probably going to be okay, that's not going to be liked, shared, subscribed, and retweeted as much as disaster is on the horizon. It's just not. I mean, because we as humans are tuned to respond to risk. Somebody tells us, hey, there's a tiger in those bushes. We're going to be, okay, well, I don't need to go over there. I need to do what I can. Maybe start sharpening this stick because there's a tiger over there. If we didn't, we died. But now in the modern world, where we're not fighting tigers, we're fighting earnings reports and short sellers and whatever's looming. It's maladaptive. And so we tend to overestimate it, especially when taking in information. So I have to be careful myself as a trader and investor that I do not fall into that same trap. I have. I fell into that trap a little bit of history on me and why I feel this way. As I said, I've been doing this for a decade. And I quit my IT job in 2013, right around very beginning of 2013, so 10 years ago. And if you read the news, we're just a few years out of 2008. So it's kind of far back. We had a little dip in 2011, but everything I would read in the news, was about how the Fed was printing too much money, that all of it was unsustainable. It was all just a figment of our imagination, the economy. It wasn't really real. There were risks that we weren't identified. The Eurozone was still under a lot of crisis back then. That's what it was, because they were still reeling from their financial issues, dealing with Greece and Italy and Spain. And we thought that was going to create contagion across the world. So anytime you could read the news, they are paid to go and find the most sensational thing, the most fearful thing that they can to publish so that you'll read it, get informed of what's kind of happening, but really the point's not to inform you. The point is to have you read advertisements. And if they were to write something on Monday saying like, things are going to be fine this week, you're not going to come back on Wednesday unless they write something about how things are not going to be fine. So throughout the entire course of 2013, as I'm sitting in an office every day with other traders and we're trading, my mentor at the time told me, as the year of 2013 progressed, because he'd been trading for a very long time, from 2000, he lost a lot of money in the dot-com crash, made it back in 2008. Slowly, the S&P 500 just trickled up. He told me, and I didn't know to appreciate it at the time, that 2013 was the craziest year he'd ever seen. He'd never seen something so consistently bullish. But remember, every single day I was hearing something about how this was going to happen again, but worse. And so as things went along into 2014, I'm trading, I'm learning, and I'm reading the news, and still it doesn't drop. But people are not stopping with the FUD, the fear, uncertainty, and doubt, until we get a little dip here, a little scary dip in 2014, and a little bit of recovery. But as we go into the summer of 2015, we have finally price starting to stall out. All the technicals are there. All of the, it comes up to a high right there, and it fails to break higher. Ooh, that's scary. And then, of course, we have, a range that's developed. And we had a big event here in August of 2015, a big event. It actually broke these lows right here. And what did I do? I did my analysis. I had listened to the best of experts. I had my own analysis that told me we failed to break higher. We broke major lows. And I went to cash. It was a sensible thing to do. And to be fair, for a few weeks, it did seem like I was right. And all these experts were right. That it had been long enough, too. It had been since about 2008. We're sitting in 2015. We have a recession every 10 years, give or take. It's getting close to that point. It made a lot of sense that was going to be the case. But I was wrong. Oh, that's right. See, I felt very valid. Never mind. I was right. In 2016, I was very validated because we made this little dip right here. We came down. We actually punched a few times below that 2015. I'm sitting good. I'm waiting, like all the experts told me, for us to come back all the way to, 140 SPY, like a huge, massive devaluation, a great buying opportunity of 25% or something like that, a true bear market that we had not seen. Surely this thing could not go on forever. And this was the pullback, or the end of the economy as we knew it, depending on who you asked. But if you traded in the last couple of years, you know that eventually we did break higher. And to add to that, it became one of the next most bullish time periods of the stock market. And I had to do the uncomfortable thing of starting to buy back into a lot of long-term stock positions. It was very uncomfortable for me, but it taught me something. It taught me something a long time ago, where here's one of my favorite quotes. I don't even need to look it up, but I'm going to anyway. It's by John Templeton. And basically what he said was this: bull markets are born on pessimism, if I can spell it right. Pessimism, grown on skepticism, mature on optimism, and die in euphoria. And we had a little bit of euphoria in 2021, did we not? We did, because I actually did the study myself, where throughout 2021, every single month on the S&P 500, SPY, made a new high. Never done that in history before. Usually there was like in the past 120 years that I studied, there were 2 years that had 11 months with a new high. But 2021 was the first and only year that had 12 new highs for every month. Percentage-wise, not the most bullish, but in those terms, the most bullish year in the entire history. And it's pretty euphoric. Think about where the crypto industry was. Think about where Tesla was at the end of 2021. And you kind of gaslight yourself. It's like, people are making all this money. Surely this isn't going to work. And then there's people that were doubting it as well. But it didn't quite play out the way people thought it would. And so 2022 happens, and we get that devaluation. But now what you have to caution against, you have to remember this. You have to remember this this saying. I'm going to keep it on here. Is we've had a big pullback. We've had an official bear market. Bear market being defined by a pullback of 30, or was it 20%? We had a bear market, 25%. A real crash. Okay, a bear market is about 20%. A crash is about 40%. That's COVID. That's 2008. These are actually normal. I know that if you read the news, you think, well, the debt that we have, the United States has, is of astronomical proportions. This has never happened before. We've got the threat of nuclear war. We've got asteroids hurling towards us. I don't know if that's true or not, but it could be. This time it's different. But again, if a bull market is to start, it's not going to happen when everybody thinks that everything's hunky-dory. It's going to happen when people are the most pessimistic. That's what the bottom represents. I remember back in November on Bitcoin being in some chats. Now, throughout 2022, in some of these Bitcoin maximalist chats that I'm in, they were very confident that their dollar cost averaging was going to pay off throughout 2022. I remember when the FTX collapse happened in November, on that day of the big collapse where people should be talking about it, where people should be discussing it and bragging as they used to about how much they were buying at cheap prices, because people thought that they were getting, cheap Bitcoin at 40K. People thought they were getting cheap Bitcoin at 30K. People even thought they were getting cheap Bitcoin at 20K. But now that you're down at 16, well, we're hitting 10, and that's very difficult for people to bear that bought at these prices. They don't want to acknowledge it. And the chats went silent. Now, I'm not saying that I knew that was going to be the bottom. I did post and flipped to bullish when finally price got out of the cloud in January. And then again, on the pullback in March were great opportunities that I posted about on TradingView. And by the way, I also post these live on Discord, which, Jim's not here to remind me, but plug. I have a Discord community. I don't charge for it. I just like to have a trading community to talk to people about this kind of stuff. But the key thing here is no one's going to be talking about it. No one's going to be excited about it at a bottom. People are going to be thinking it's going to go lower. That's just the way market psychology works. And so what that means to me in the context of my own trading, my own stop out, trying to go bearish this week, in addition to all the other indicators, is that I need to be willing to accept that we could very well be in a bull market. I have a lot of long-term stock positions that I've picked up that have not gotten stopped out. Of those, more recently, Eastman, that was one I think I put on, I believe, this month. Kroger, that's just because Jen loves it. Nice little pullback there, actually. Wow, 46.41. I already have Kroger. I use it I do cover calls with it, but I'm not opposed to getting more. MKTX, which has been a winner for quite a while now. Had a little pullback here, still getting it. Waste Management, doing well. Caterpillar was my most recent. Again, here's a bullish trade that I took on, I think it was in middle of March, that has not come and stopped out yet. The stop out is about 202. I'm not going to interrupt myself, but I want to talk about that aspect if I can. TFC, you got to get bank exposure. What is more hated right now than banks? I got to be long. I just have to be. Yeah, I may lose money. I don't care. You got to look for the things that are most hated. One of my best trades in recent years was ExxonMobil, which was right around that time. Remember when oil went below zero, where oil was free? If you remember, it was the beginning of 2021 when EV stocks were all the rage and people said, get out of energy. No one's going to use gas anymore. We're all going electric. I gotta tell you, I don't see as many Teslas on the road anymore. In fact, some of my most ardent Tesla fanboy friends, they've actually traded up for hybrid cars. In other words, gas-powered BMWs and nice cars that can plug in or use gas because they got tired of the range. So, but just remember if you were trading at that time, the hype. And that's why I like to do these. I like to share. I like to pontificate on the live stream because I want people to change their alignment in their thinking. Because a lot of people they try to pull in information from the most popular sources who are inflating people's egos, talking about stuff like, oh, that investment that you're in, yeah, that's gonna move and it's gonna make you feel good, but it may not be true. What's true is what is false. And that is when narratives fall apart. In other words, the narrative that we were no longer going to use oil after 2021, well, that was somewhat obvious, but it wasn't in 2021 because of the narrative. That's what banks are right now. This is the opportunity of 2023. To take advantage of this banking crisis, fear, uncertainty, and doubt. I can't put it any other way. Look, nothing's 100%. Hashtag disclaimer, do things at your own risk. But in the line of contrarian thinking, find something that is at a low because of a narrative reason is banks. And if I get some time here, which I may if I'm feeling like it and you guys want to hear it, I gave a presentation this week, got some slides about the banking crisis and what happened, why it's unique, it's not a broad crisis, and what it meant for Bitcoin. I gave it for a Bitcoin barbecue where I come and talk about ideas here in Atlanta. NCLH is another one that I'm watching that I took a position on. Again, cruise lines, they were all the rage in 2021, but they hit a level. But as long as NCLH holds here, and then ATVI, the merger arbitrage is still, hasn't been rejected yet. So I haven't, on these bullish stock trades, I haven't gotten stopped out. They haven't hit my risk level yet, despite all of this uncertainty. And again, going back, we're hitting a resistance, but we're not necessarily coming off of it to the downside. And that's why I can be okay taking short futures positions on, the market as a whole, because I have these stock positions in my portfolio that are holding their ground. They're holding their ground. And so I feel really comfortable and hedged by doing this, but also by being in the market every day, it's revealing to me what's going on. The stocks I have that I've got positions on, they're doing okay. The market keeps pushing higher. It keeps squeezing me out of a short or two here. The money I made this last week, or was it the week before, was on the long side. It was this event here on Thursday, April the 6th. Again, this was a 50%. I'll start over. So this was a 50% level. From the March 28th to here, we come to this point, boom to boom. And on the 1 minute, and by the way, in the Discord futures chat, posted it when it was happening. You have this little range right here, a little false breakout. Actually, the false breakout happened here with a little poke below the low, and then what I call a TS recapture. Take that back just a little stop below there. Back to the 50%, 3 to 1, and go. Didn't stop out. And then what was cool about this was this is an example of why I don't move my stop to break even. Because if you move your stop back to break even of right about here, what the market likes to do, I'm sure this has happened to you, is come back and snatch it. But remember, what are you playing? You're playing a level. It can come back and hit it again. And that's what it did. Unfortunately, it didn't go as bullish as I wanted to up here, and I had to cut it at a smaller profit. But this has happened time and time again. I'm going to show you another example. This is AI, literally the symbol AI. Had a big rally from ChatGPT and all the such in the beginning, and it has come down and held this 50% retracement 1, 2, 3, 4 times. Same thing as I was talking about on Caterpillar, where it has come down at 1, 2, 3, held that level, that 50% level. So I'm going to stay in a trade like this, and I'm going to, let my profits run as long as it doesn't break below it. I've already got my risk adjusted. I've already figured out what my risk is. And so this is one of the reasons I don't like keeping up break-even stop. If that's what you want to do, if that what makes you feel better, that's fine. But remember, the market doesn't care about your stop. The market, even though it seems that way, the market cares about levels. The market cares about support and resistance. And if you put your stop where you got in, if you took it as support or resistance, you're just putting it where the market may come back and take it. Don't be mad if it does. All right, I've been ranting for a while, so let me go back and catch up with chat, because I know people want to look at things. That's right, I need to look at DXY. So DXY is interesting, and I've already got this kind of marked off, because one of the things I've said in the past 2 weeks with these two little red rectangles is I want to see if we're going to hold or break 102 on DXY. DXY is a dollar index. It's made up of the US dollar compared to other currencies. Again, going back to narratives falling apart, remember in 2021 where everyone knew we were going to have inflation and everyone was saying we need to get out of the dollar. You need to just buy stuff. Just doesn't matter what it is. Anything you have in dollars is going to get inflated away because of inflation. Get out of dollars. But the irony was through 2022, the dollar, the US dollar, was one of the best performing asset classes. It's ironic to the narrative, but it makes sense to the fundamentals, because as the stock market goes down, the dollar tends to go up. And also as interest rates on a currency are raised, the value of that currency goes up relative to lower interest rate currencies. But now we're coming to the aftermath of that. And we are once again at a support level here of 102. Same thing you're going to see on euro dollar. Euro dollar makes up a lot of the DXY, but also with JPY, the yen, it also had a hit of its 50% perfect at 127.5. Yen's showing a little bit more weakness than the euro dollar, actually, because the euro dollar has come up here. But all in all, the DXY has not quite broken it down. But this week, just like the S&P 500, we have a little poke above that level. I want one more. I want one more bar to give me confirmation that this level has been broken, which I'll be here next week to say one way or another. Next week's going to be critical. I feel like I say that a lot, but really, the dollar is at a major support once again. The S&P 500 index is at a major resistance once again. And as we said, VIX is starting to kind of punch down a little bit. But really the S&P 500, the aggregate, and the dollar, those are really the key stories. They really are. They really are. Okay. Let's check on some things here on the chat. So if you got things in the chat, punch them in. I'm going to try to knock them out to look at. Wow. I've had thanks for being here and listening and encouraging me on, guys. I appreciate it. This is information I think is useful to people. I want to get out there. So I'll keep talking a little bit longer after we go through some lightning. So, all right. XLF and RTY. So XLF is going to be the financial ETF, the Spider Select Financial. It looks like it's, you see, again, banking, financials have hit a major level, have hit a low. I like some of the individual component stocks. Truist Financial Corporation is going to be my choice here. I'm not as big a fan of Bank of America, but it's showing the same thing. The big winner this week was JP Morgan, which definitely has held a support, and it's really kind of winning in financials. A lot of these big banks, they have had a lot less scrutiny because they are considered too big to fail. And so it's the smaller banks that have faced the banking crisis FUD a lot more. But if you're going to look at a discount on anything, if you don't want to do individual things, XLF. In fact, it's already come off that level, and it's had a very good week. It's buoying the stock market as a whole in a lot of ways. All right. Russell, is that the RTY you're talking about? I don't look at the Russell that much, but we can. For the futures, it is also boom to boom to boom, holding that level, 1,700. I don't look at Russell, not because I don't think it's valuable. It's because on a daily basis, I'm looking at ES, S&P futures, and NASDAQ futures. And between the two of them, I still oftentimes miss things because in the morning, I'm looking at the futures, I'm looking at stock opportunities. I just can't add one. But I tell you what, I promise you, if you post it in Discord, I will come and look, and I'll give you kudos if you find me a good trade in it. So NASDAQ 100, what's the symbol for the NASDAQ 100? Going to be the same kind of, probably the CFD, I bet. Wait, isn't the NASDAQ 100 just the way of interpreting the CFD? The weekly, yeah. So it's good when I look at the NASDAQ 100. That's probably I'm gonna bet that you're in Europe and or UK. So that's the CFD version of NQ, which I trade, and it's telling you bullish. And the reason for that is, again, I tried to hodl on to this position. Now looking at it, again, it's an example of levels and stops at break even. On NASDAQ last week, had a long trade that I had to exit out of with a small profit here, came back down, and if I'd had my stop below that low, probably would have taken it, only to once again frustrate me, just like the long did, but that's okay. That's okay. If we zoom up and we look at the daily level of the NASDAQ, it is telling us bullish. And the reason it is doing that is because we had the major high from February, and we had respect of it in March, could not push above it, and then what happened? Came down over the last few weeks, which was also the 50% of this rally. Here is your zone of support. Clear, clear, clear. From the rally of late March to also being the support resistance of the year. All we need to do now on NASDAQ is get back up to this high and try to break it. This is why it's been so tricky for me to get, we talk about this in my Discord, the Valhalla contract. I want a single contract, a single soldier, a single warrior to sit there and fight and battle and all through this ranging activity and survive to ascend to Valhalla. Actually, they need to die to go to Valhalla. So I've had a lot of contracts go to Valhalla. But the idea of having a single contract, that's like, what would that be like? It's not like winning a ring in a competition. It's just for me, because I structure my trades around setups that I've studied for a decade, that I draw up my levels, not complicated, but to be able to grab a reversal off of a major level with a very small amount of risk. Like I judge my performance based on risk and reward. A lot of people, if they make a dollar, lose a dollar, make a dollar, lose a dollar, and they win more than they lose, it's a winning system. That's for them. For me, I'm okay with taking even more losers than I win, but I want to have that beautiful setup where I take a very small amount of risk, kind of like that 1 minute here, back on April 26th or April 6th, and hold it all the way as it ascends. That's what I'm constantly searching for, and it's very elusive. It's very difficult because of things like this week, where you can have a great trade from a week prior on a low time frame with a tight stop, but it comes back in here and tests it again. You can either do one of two things. You can lower your stop, take on more risk, which I don't necessarily want to do, or just keep trading until one of these days the probability hits. Again, on the daily time frame, on the broad time frame, NASDAQ is bullish. Has not really proven otherwise. That support was not broken, but it's very difficult to try to grab and hold any of these lows, basically. It's very difficult. That's just the way market is. Tricky. It frustrates you, but you know what? I have to love it because, it's fascinating to me. It's fascinating to me how difficult the lizard people, really make it to have one of those beautiful, beautiful trades, one of those beautiful setups. But we're going to get it. We're going to get it. So, all right. Gold. Yes. What is gold? I honestly, I'm remiss that I don't look at gold that much. Gold is doing very, very well. As I said, I'm remiss that I don't look at it. It is coming up to the top of a multi-year range. Gold's been doing very, very well. Very, very well for the gold bugs out there. Did it come and hit? I think one of the reasons I didn't really grab gold, oh no, it did. It came down in September and it hit that 50% level there. Again, 50% of the 2018 to 2020 high came down to here, pinged it. In fact, it hit it, bing, 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 3 times. There's your support, and down it goes. The last time I looked at this, I think I probably had or have an alert for this 1800 level. Yeah, that's why I've missed this rally. is because I don't look at gold often enough. Thank you for bringing it up, though. And I was looking for it to pull back to 1800. Didn't quite get there. But yeah, that's doing pretty good. I know I've talked about it in the past, but I haven't really kept my note. I need to write my notes on here. Maybe I'll do that. But yeah, the break of the high here is going up. I do remember that silver I was less bullish about, but it looks like precious metals are doing very well. So, it makes a lot of sense that precious metals would do well under inflation. It's just they haven't been quite doing that in the exact fashion that people would expect them to. But they're doing very well. Gold, though, would I buy it now? I'm sorry, but no. When would I buy gold? I would be looking, since this is a multi-year range, to really have a monthly bar. 2 monthly bars get above the 2090 level. I really want that extra confirmation. Remember, when you're coming to a level, if you have any confusion about is it holding or breaking, go up a time frame. Back in September, October, and November of 2022, you had 3 months that touched this level, held it, didn't close below it. Very solid. And then what you're probably going to have come up here is a test in this range to see is it going to hold it or break it. Could very well have a nice bullish close there, and you're good to go. But watch for that to happen first. But right now, the resistance is so close, I don't think I really want to open a new position. Silver is tricky because you have a lot of these highs in here, and it could stop at any one of them or none of them. I think gold's a lot more clear that it's going to come up to retest that high. So if you are looking to trade gold bullish, you might be able to do it on like a short-term day trading with a bullish bias. It's definitely in a bull trend. You're going to have that wind at your back, but you got to remember where the top is. All right. Small moves, aggressive put sellers. 16 VIX times every 1% move. Masses are fearing a recession, but stocks are pricing earnings growth for this year and next year. The masses are fearing, people are always fearing a recession. I mean, that's what I talked about early on. So always takes longer than we think. Yes. 2005, 6 didn't cause a recession until years later. Right. In fact, that leading indicator that we were that I was looking at here, it's been flashing since the middle of 2022, and a recession hasn't happened. And then it also showed us that at the end of 99, it also started showing, as you noted, in 2005, 2006, but we didn't have the recession until 3 years later. So it's telling us something's happening, but we don't know if it's going to be a quarter, 2 quarters, or 2 years. Picture traders are called head and shoulders. Yeah, I think I'm catching up things. Do you think that we might see a 26K again or lower on BTC? Good question. Let's talk about it. We got to talk about Bitcoin. So Bitcoin has broken out of the Ichimoku cloud back in January, made a post about it. It then pulled back to a 50% level at 20K in March 9th on the banking crisis FUD. A lot of news says that Bitcoin is up on banking crisis. It's up after the banking crisis. That's true. But it pulled back to there. Now, what would happen if Bitcoin got down to 26K? Well, for the same reason that I called for a bullish trend beginning back in January 12th, when price got out of the Ichimoku cloud. The Ichimoku cloud is a powerful tool for defining a trend. So if we were to come down to 26K, as it stands now, it's still contained within this bullish trend. Good. Where do I expect to have some resistance for Bitcoin? Well, like most things, I'm going to be looking for the bear trend from either the March 2022 high, which is about 32,000, and then the next level being from the all-time high down to the low, which would be at about 42,000. And so we're getting very, very close to 32,000. Again, like gold, I don't want to be putting on a new position right now. You got this trend going on for a long time. And I know I'm going to piss some maxis off who say that any time is a good time to buy because Bitcoin's going to $1 million. That's what I'm told. And as a trader, I'm going to hold off because while I may not have faulted, while the opportunities for Bitcoin this year were here, and you need to sit on your hands. If you weren't looking, you missed it. Okay? Can it pull back? Yes. But I think what you're going to end up happening some way or another is you're going to come up to here, to that 50%, and that's where I'm going to be looking for something to happen. Try to get either a break of it or a hold of it. And if you get a hold of it, then yes, you may pull back. What could we pull back to? Well, once again, same analysis. I'm not going to change. If it goes from there to 32, if it's nice and perfect like that, which sometimes it is, sometimes it's not, that level is going to be 24K. But how does that fit within our trend analysis? Well, if it pulls back to that point, we're going to have to wait and see because there's a good chance that that's going to get us on the bearish side of the cloud on the daily. So we're going to have to wait and see. So right now, you hodl. You don't add. Hashtag disclaimer, this is not trading advice. But does it not make sense to be smart when you have a big run up like this? If you've been trading long enough, eventually you're going to get punished for buying something once it's been going up like this. There will be a pullback. There was a pullback here. There was a pullback here from 60K when everyone was jumping into it. So it's Bitcoin. You're going to get an opportunity. You're not going to miss it. Trust me. Because I remember the mantra that everyone said throughout 2022 when price got down to the past all-time high from 2006 or 17. Bitcoin has never dropped below its last all-time high. Well, yeah, that wasn't true. Play it smart. Play it smart. Oh, I just noticed that. Look at that. You remember how that, look at that. I know this is happening after the fact, but so remember that 50% that I drew from the year's move where it pulled back to that 50%, which was also the bottom of the Ichimoku cloud? Well, that was actually also that all-time high. I posted about this based on the 50%, but that escaped me. I know in hindsight, everything's really obvious and clear, but this is why levels can be traded. This is why trading can be done, because these things happen. Do we know them every time they happen? No, but you only need a couple of tools in your tool belt. All right. Okay, so I answered that question about Bitcoin. Is it going for a correction? It's interesting. People are saying like 25K, 26K. I got to be honest with you. You're asking that question way too late in the move, buddy. You needed to be asking that question when in January. You need to be asking that question in March when it was bearish, because you're asking that question now because you see this, and you want to be a part of it. I know. It hurts. It hurts because you think about what could have been. You want to be a part of it, but you gotta hold on to your cash until you get a pullback. And then when you get a pullback like this, you got to turn off the news and you got to say, you know what? A month ago, I told myself if it pulled back to this level, I was going to buy it. I'm not going to be dissuaded from that plan, that strategy. I'm going to buy it. I'm not going to read this person's opinion. I'm not going to read that person's opinion. I'm going to go on the opinion of me 2 months ago or whenever when I made this plan. I'm going to execute this trade, because the reason it's down is because everyone thinks that it's going down more. So you can't have a pullback on anything and then go out and try to get other people's opinions or read the news on it. if you want to own Bitcoin at 25K because it's 30K now, you need to remember that. You need to say like, okay, I wanted to own it at 25K. I wanted to own it at 26K. That's where I want to own it. Time doesn't matter. News doesn't matter. That's what you want. You wait for it. You're patient. You can't go chasing it. And you can't be thinking about, oh, well, if it pulls back to just a little bit. No. Opportunity is not going to feel good. It's not. What feels good is jumping into something like this that has been going for a long while, giving a lot of people returns, drawing people in psychologically, with Twitter ablaze about how it's going to be even better. That feels good. That's why people make that mistake. It feels good. You have the herd, the tribe, all, patting you on the back, telling you it's going to be okay, because it has been okay. Every time I've taken a great trade, every time, it's felt, anytime I've taken risk, anytime anyone takes risk, you should feel uncomfortable. You should. It means that you have enough on the line to matter, and you're also getting it when no one else is really thinking it. You're getting it at a deal. It's always going to feel uncomfortable. It just is. Get used to it. I used to think that eventually I would take enough trades until it was just all just... In some ways, that's true. Like I was talking about taking a loss on trying to short the market this week. I feel good because I know it's part of the plan. I know that I have long positions, and I know what I'm hunting for. I'm hunting for a short, but if I don't get it, then I know that I need to be long. That's the point that you can get to. But I'm always uncomfortable. I'm frustrated even when I don't get those instant gratifications. But you got to get past that, and it takes time and experience. All right. Chasing is for drinking, not trading. Kathy Wood says it's going to $1 million. Well, Kathy has a lot of money and what is it? ARK KK? Yeah, Innovation. Kathy has a lot of money and ego on it going to $1 million. I'm really good at predicting the weather from yesterday. Yeah. 50% retracement from 19K low to the 13K high. What do you mean by that? I think we also need to look at Ethereum too. From the 19K, the low. Oh. Okay, good question. Good question, KVC. So, generally speaking, if I'm considering it a proper 50% retracement, I want to take the move of its entirety. But you're right. You have from this recent post-banking crisis low, you do have a trend which is unique. It's a secular bull trend off that level. It also matches with these highs here. It also matches with the highs of February. So if we pull back to here, 25K, I'm not going to be mad at you. I'm really not. I think actually, if and when this happens, that's going to be something that I'm going to be looking for. If I were to get like a spike, if I were to get like a false breakout of that level, I'll take it. I will. Will I take it in isolation? I'll probably wait for a setup. I'll probably try to do a lower time frame trade on that to express that. So, all right, Schwab. Schwab got hit bad by the banking crisis, and I don't know why, because they're a brokerage. So they have earnings. Yeah, it looks like they have earnings coming up. I don't really trade things right before earnings, especially not options, because you're going to lose. You're just going to lose most of the time because the IV crush is going to happen. What do I think is going to happen to it? I don't know. This is part of the banking fear going on, and broadly speaking, Schwab had a pullback in June of 2022 to the 50% level, but where it's at right now has solidly broken below it. And this is entered into what I call the valley of risk, where you've broken a major level and it's going down. You don't know where it's going to stop. If you're in the position, you're just watching it go down. If you sell it and you're down, it's going to revert back. Tends to happen. If you don't sell it, it's just going to keep grinding against you. The proper place to have exited was at 56, but you didn't, and now you're just going to be set bag holding, and you either need to get rid of it for your emotional health, take that cash, that capital from it, put it into another trade, or you need to stop looking at it if you like the company, you think they're going to recover. But there's no setup here on Schwab. You're going into earnings, and I don't have any change here, but I could flip a coin for you there. The only way that I would look at this is if it were to, on this dip, have come to a 50% level of the reaction. Like, for instance, when you had that big dip, boom, from Monday, March the 13th, and then you have the up move, then I would look for a 50% there. And what I call here, because that red line is a Tinkinson from Ichimoku, I call that a Tinkinson recap. So what I would, if I was so inclined, do is structure a trade that looked like this. Let's see if we can get a good risk reward back up to that 50%. If we take it there at 53.06, we need to have our risk below the low. And then if we try to go up to the 50%, it's only a 1.5 to 1. Less than a 1.5 to 1, no trade. It's not worth it. There's too much play in here to try to structure a reversal that I like. And so now going into earnings, you're already kind of in the negative side of that trade anyway. As opposed to Truist, which I did take a position on, because here you had the same banking related crap going on, except where's that coming in? Except when it pulled back to here, the 50%, it was Tuesday of week before last. I could put a stop below that low, and I could actually still get a good 2 to 1 up to that level. I'm going to play it for more, but that's just a better setup to me. It is. And so my exposure is going to be in Truist to try to play this banking bottom. And that's just my choice. But Schwab, I'm sorry, I got nothing for you. I'm sorry. It's just not one that I want to play. A lot of my buddies are panicking about the dollar and the yuan. A lot of Twitter, Instagram posts are pushing dollar panic. Yeah, they've been doing it forever. Sentiment is super duper high on dollar hate. I don't know why people want to hate on the dollar since it's everything to us. Like, the crypto maxis, they really want the dollar to fail so that their bags will go crazy. But what people don't realize, or what I tried to point out to people, was, when we had that major event, that banking crisis FUD, what did Bitcoin do? Boom. Hey, you remember this little thing we had, COVID? Do you remember what it did to Bitcoin? A lot of people seem to ignore it. But in the case of Bitcoin, when the rest of the market was going down, Bitcoin from its February of 2020 high to the low was minus 60%. If we hit some kind of calamity, crypto is going to get hit harder than the stock market. Now, to be fair, in both cases, both March this year and COVID, you get a V-shaped recovery. So it's a good thing. But I find it erroneous to be shilling crypto now as a hedge against an economic crisis, because the evidence shows us that it will respond worse at the onset of an economic crisis. Instead, we need to be ready to use that as a buying opportunity instead of listening to the narrative now that we're not going to have time. You'll have time. You'll see it coming. Be patient. as far as like the dollar going bust, I am keeping apprised of things, developments like BRICS, like Brazil. BRICS stands for Brazil, Russia, India, China, South America. These are the second world countries, basically not the primary economies, not the biggest economies of not Western economies, not Europe, Japan, and the United States, but emerging economies. And together, they sort of have this idea that they want to form an alliance, a currency system of their own, because Russia got kicked out of the system. The word escapes me. China definitely wants to do their own thing, but India and Brazil are really kind of our friends. If you were looking for outside exposure to the dollar, I actually got that question this week from a friend who wanted to buy Chinese yuan. Now, I can understand why someone would want to do that if they're reading the news, because China's powerful. That remains to be seen. They really don't have that many people as they did since they instituted the one-child policy 25 years ago. Who would have thought 25 years after you tell people to have only one kid, you end up with a lack of kids? And so they're going to have an aging population like the entire rest of the world, and it remains to be seen how that's going to happen. But it's not readily apparent to me that China is just going to take over. Russia has its own problems, to say the least. I really think that Brazil, if you put me on the spot and said, hey, if you're going to invest in a emerging economy, the Brazilian real, I think that's how you pronounce it, would be the one that I would say that's your hedge. Now, with the dollar being the way it has been for the last 2 decades, if you look at a chart of USD BRL, you're going to see that it has been going up until about 2021. But it's shown a lot of strength and stability versus the US dollar. And if you think about it, it's in the same hemisphere. They have tremendous amounts of natural resources. They have a large population of young people, working people. There's a lot that Brazil can do. India, rupees. If you're looking at a chart, USD versus a currency, then USD, if it's going up, that means USD is getting stronger. So as a contrarian, I like it. I like the idea that you're going to be potentially selling a top if you start looking at these other currencies. But we need to wait for a setup here. I've been telling people for a good part of a year now that interest rates have gone up, that the Forex market is going to possibly give some really good trading opportunities. So I highly encourage people to start looking at Forex because once countries have different interest rates, actual trends between their currencies can develop, and you can find that movement for a good trade or a hedge. But circling back to the FUD, we don't actually want the dollar to fail and collapse. I like going every Wednesday night and getting beers and wings with the boys. And if I can't, spend, dollars on my $14 beer and wing special, I'm going to be very sad. And I don't want that. And I don't think anyone really wants that. I don't think anyone really wants the dollar to fail. I think that they have an over-exaggerated sense of fear that might happen because logically speaking, we have all this money printing. The Fed has a huge balance sheet. The government is in debt. It's numbers that we're not really evolved to comprehend, but we're dealing with. And so it does seem like it's a precarious footing. But I think it helps to take a step back and recognize that, these fears we have about numbers are really just that. I'm looking outside right now. The sun is shining. It's spring. Unemployment is very low. Wages may be low. People may not make as much money as they want, but we don't have a situation right now like we did in COVID. We don't have a situation in 2008 where people were losing their houses. Things are okay. And I think for everyone's mental health, you need to remember that. I think you need to have some gratitude. I try this. I try as well. I definitely have to. I deal with my own anxiety as well. But I think it's okay to consume the news to stay informed, but you got to avoid the doomer cycle. There was a meme that I almost used as my. Let me find it. There was a meme I almost used as the thumbnail for today's live stream. I thought it was kind of funny. This is, by the way, in case you don't know, the Doomer Wojak meme, where, yeah, if aliens came to Earth, people would be so consumed with concerns about the dollar failing and inflation, they would just be like, oh my God, dude, I just can't deal with you aliens right now. The idea that we're not alone in the universe is just not nearly compelling enough for me to take a step back from all the other things I'm worried about. But that is kind of a sign of the times. And I don't really have a solution for that. I do have a feeling of unease, like everyone does. But I think we're going to be okay, man. I actually do. Because you only get a recession every 10 years. We had one. That's my hope. And I think that should be everyone's too. So I'm gonna end it on that note. I think things are gonna be fine. We're about to go into the summer months. Summer months are typically slower, but we're going in objectively. This year, from January 3rd, the open of January 3rd to here, the market is up 8.4%. Remember that the average performance of the S&P 500 is, 6%, 6.5% per year? We're literally more bullish than average in this year. Think about that. And have a good weekend, everyone. Thanks for joining me. I do this every Friday. If you don't catch it live, 4 p.m., join the Discord, link below, and love to come and talk to you. Again, trade wisely. We'll see you guys next week.